All right, automotive retail is generally considered to be somewhat of an economic barometer, and I think that's been the case in the years since the 2008 credit meltdown and recession. This is just to give you a little perspective on our company, which is headquartered here in Houston, which is we're listed on the New York Stock Exchange under GPI. We're the third largest in the U.S. You may recognize some of those names. AutoNation, Penske are the two larger than us. Penske and Group 1 are the only international ones. Van Tuyl is now known as Berkshire Hathaway. But you can see auto retail is kind of a large revenue business. Not so great on the margins. We move a lot of money. Let me skip that one quickly. I'll come back to it. This just shows you our brand mix. What may be interesting to you is we are the largest auto retailer in Houston, in Texas, and in the state of Oklahoma. That used to be a good thing until oil got to be about $45 a barrel. But you can also see that we're spread around the U.S. and we're also in Brazil and the U.K. So about 17 or 18% of our revenues come outside of the U.S. And if you think it's tough at $45 a barrel oil, you ought to be in Brazil if you want some to sharpen your economic skills and your operating skills. We're a very big Toyota company, but we're also big with Ford, BMW, Honda, Nissan. You can see we manage a brand portfolio and a geographic portfolio. So we like to have growing brands and growing markets, which is how we got into Brazil, but I'm sure it's going to grow again someday if I live long enough. Okay, this is a reflection of the U.S. economy. This is the automotive industry sales. It's called SAR because it has to be seasonally adjusted. All right, every month you sell so many cars, but you don't sell as many in November as you do in August. So every month when we get car sales data, it's projected to an annual rate. You can see it dropped to about 10.5 million in 2009 following the credit meltdown in 08. This is a credit-driven business. That put two manufacturers into bankruptcy, as you know. We're now back to a 17 million annual rate. The month that ended yesterday, September, actually annualized to over 18 million for the first time in a long time. I don't think that was supported a lot by Texas and Oklahoma, but at the current time, auto sales are quite strong, which is a reasonably good economic indicator. Okay, what drives auto sales? Quite simply, consumer confidence. If you feel good about your future and your job and so forth, you buy a car. That correlation is very high and has been for a long time. Now, what's been driving U.S. auto sales since 2009? Well, quite simply, we say the age of the car park. That's the units in operation. There's probably 250 million cars in operation, cars and trucks, in the U.S. People are generally shocked to learn that the average age of a car on the road in the U.S. is 11 years old. I mean, there's necessity for these people to trade these cars. Now, they may buy a used car, not a new car. And by the way, the used car market is about 2.5 times bigger than the new car market. So it's kind of 40 million, 35 or 40 million. Okay, you buy, in the U.S., you buy a car based on a monthly payment, right? It's the affordability, the accessibility of the car that makes a difference. Financing is driving this upward trend line also for auto retail. Banks very much know the formula for lending on a car. They learned in the recession that people make their car payment before they make their house payment. Why? You have to get to work. Right? You know, that public transportation is only prevalent in a couple of U.S. cities, really. So you pay your car so you can get to your job. Used vehicle prices remain robust. All right, that helps for a trade-in. That allows leasing. A component of leasing, about a quarter of the cars sold in the U.S. are leased. Well, the lease payment, half of that is kind of a depreciation figure, right? And so a strong projected used car value makes a lease payment lower, makes it more accessible. The number of licensed drivers in the U.S. is still going up. And although it kind of hammers us in these energy states like Oklahoma and Texas, the average U.S. consumer has more disposable income because they're not putting so much in their gas tank every week. And many people are willing to take that money they save and buy a new car. Okay, Lending, again, we have a lot of bankers here. Lending is driving a lot of these car sales. The average length of a car loan, you can see, is now over 5 years, right? And for used and new, it's over 5 years. 25% of our car loans are for 72 months. I personally hate to see that because these people get what we call upside down in their car, right? They can't pay it off as fast as it depreciates, no matter what you put down on it. So then it's hard for them to flip out of it if they need to liquidate the car or they want a new car. But that's the nature of the beast. And so lending is really driving this, but the length of the loans are getting longer. But with these low interest rates, it's also very easy for the auto manufacturers to subsidize the rate of the loan, right? 0% for 60 months, 1.9% for 36 months. You hear those promotions, and it's driving this sales trend. Now, I told you lower gas prices give more disposable income to the consumers, all right? So many of those people choose to buy a car, but it's also shifting the mix of what we sell to bigger vehicles. You can see the yellow line is truck sales. As the price of oil and gasoline goes down, people belly up to the bar and buy a big old Suburban or Tahoe or F-Series truck, and so now that is good for the auto manufacturers. They make more money on the big vehicles than the little vehicles, but you can see that probably can't be sustained long term for a lot of environmental reasons. Okay, Texas is not all oil, but it became more oil at $45 a barrel than $60. And what Keith said is somewhat what we're seeing. We did learn that in that first hit down to $60 a barrel oil, that Houston and Texas is a lot more than oil. We weathered that downturn pretty well. We're now going to have to be very vigilant because this last downturn to $45, it does seem that things may be getting softer in our business in these areas like Houston, like Beaumont, and areas that, Oklahoma in particular, where they really don't have the same economic diversity that we have in Houston. So we're going to have to be vigilant. I think Keith really did a good job of hitting that. Now, what's the employment situation in our industry? We need people. We have not been able to hire enough technicians for 5 years. Technician is a skilled job. A good technician can make well over $100,000 a year. We're hiring technicians as fast as we can. We're hoping we get some people coming back from the oil field that want to work as technicians, some skilled people, but we haven't seen it yet. Maybe what Peter said, maybe they're sitting on the sidelines for a while. We also need service advisors, the people that actually wait on the customers in the service drive. We need salespeople. So we cannot hire enough revenue-producing people. We have a real need, and some of these are good paying jobs. And that's in Houston, and that's in Oklahoma, even during these times. Now, trends in our industry that you may be interested in. Okay, we said, when the revenue level drops during an economic correction, the manufacturer of automobiles is a fixed cost business. They cannot adjust their cost structure. In my business, retailing, we have some flex to our cost structure. People, advertising, inventory, we can flex it. Auto manufacturer can't. It's a scale business. You've seen Renault and Nissan go together. Dongfeng is a Chinese company that now bought into Peugeot, which is known as PSA, one of the French auto manufacturers. If you read the business press, you'll see the CEO of FCA is begging to merge with some company, in particular General Motors. So you're going to see more consolidation in the manufacture of automobiles. Consolidation at retail. The business we're in is becoming a bigger business. That's why companies like us have continued to grow. The real estate in markets like Houston, Dallas, Los Angeles, it's no longer a family business. We frequently will have a facility that costs $40 million with land and building. That's not a family business anymore. Alternative fuel vehicles. I'm sure you read about that. Tesla is the one that seems to get all of the publicity. But out of 70 million vehicles sold every year, 300,000 are electric. Out of 17 million in the U.S., Tesla sells 40,000. It's not significant yet. Even in green countries, Scandinavia and Germany, they don't sell very many plug-in electric vehicles. We're not nearly as close to that as people would like to believe. Obviously, there's going to be a movement that direction. Toyota is betting on hydrogen fuel cells. Obviously, there's not an infrastructure to put hydrogen in your car. They're starting that in California. Ride sharing, you probably read about Uber and Lyft. Will that impact the auto business? Maybe somewhere down the road, but again, this is more a displacement for taxis and rental cars. People who want to own a car still own a car. The younger generation clearly likes to use things like ride sharing and the convenience they can do to get the car where they want it, when they want it. But thus far, there's no near-term material impact that anyone in our industry can see. But it could be a long-term issue. Self-driving automobiles, that's going to happen. The technology is here. How they manage the legal liability, not so clear. When your car's coming down the road and a child runs out, do you program it to run over the child or go left to center and hit the other car head on? I'm sure somebody will figure it out. There is a market for this. Older people, people get in their 80s and 90s and they shouldn't be driving. If they can have a car that will get them there safely. We can get these people who go to bars at night to use them. There is a market for autonomous driving, and the technology exists. These cars work right now. But how those get adapted into society, no one's exactly sure. And that's it.
That's it.